The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And that is me. What is that? I must have the big, wide view of me here today. I guess that's what they were looking for a while. Maybe I got to move a few more things out of the view of the camera. You never know what you're going to find on this desk. But certainly it will always be me. And that is the squeezably soft host for the Power Trading Hour, David White. And as we continue to move along today, what do we have? We have a market that was severely down. It's now trying to make its way back up. Still off at 9 points on the S&P cash, 2.7 billion shares. And what does that mean? That means we have a high volume low. We blew away the last low around 2070. We're back above it. But that means that the 2052 of this morning will have to be retested once again. The question is it going to be retested in the next few days? Are we going to continue to see massive Fed intervention as we saw overnight in the dollar? And how long are they going to keep that up? This and many other questions will be answered today on yet another fine edition. And as we go back into the breach, dear friends, of course, we're almost, we're off, 12 points on the NASDAQ, and that's mostly because they pushed Apple literally as hard as they can. It's up $1.44 now. It was down to 109.63. It's going to continue in this lower range here. But again, today is options delta neutral day. And this is a fairly typical Wednesday for options expiration for them to go delta neutral a week from Friday. And that is to push it down literally as hard as they can. But the low of today, at least the stat that I quote, is that the low of today probably will not be broken between now and Friday. There's an 80% chance. If it is, there's a huge amounts of money to the downside. So I continue to look at a market that maybe have 25 points up, maybe to 2,100 once again, and 100 points down. And the odds are probably fairly equal that you hit either one of those first. That's why I would not be long this market. The other reason is we've got somebody riding to the rescue if you are short. And that someone is normally a dead president. Mr. Dollar, he is back on his horse, and he is flogging it. They took them out to the woodshed today. They said the dollar would not stand. But guess what? It's slowly coming back. The 96.30 level is the level that I've been looking at. And my guess is that it does not close underneath that. And yet we have the third false breakout of that 96.30 area. And I'm talking about the cash continuous contract, not a current version of the contract. So that's what you would want to look at. If you ever need any of this stuff, let's say if you want the ticker symbol at Yahoo for the dollar index, I'll be more than glad to email it to you. You can email me at path@tfnn.com. You can also call me at 877-927-6648. But what I'm watching here is a dollar index that's ticking up penny by penny back up. And that is something that could be enormously bearish, medium and long term to this market. Short time, you can push the market around. Long time, medium term, much, much tougher. And I think a lot of what we're seeing today is about options expiration. And the question is just what's going to happen here. Another close under 2070 would be deadly for this market. Close higher, maybe you make a little money. Close lower, this thing could start gapping down 50 and more points a day in the S&P cash. So what the Fed has done by intervening and pushing the dollar here is really make a market that is incredibly brittle. It doesn't mean that it will break, but if someone drops something, it will. Also, in China, we kind of have a target now for just how much they want to devalue their currency. And it did in this little 2% that we have. Basically, when you read between the lines and people that are over there in China, they want to drop the yuan at about 15%. Of course, yesterday was 2%. Today was another 2%. We got 11% more to go. And the question is, how much money are they going to throw at this dollar to keep it down? My guess, along with the huge amount of losses in Germany and France today, suggests that probably a lot of this buying was people leaving the the European stock markets, and they're coming in here today. My guess is that they got out of the frying pan and into the fire. And I would be extremely careful about trading these markets. Premiums are still extremely low. If you do want to go long, well, buy a little protection. It never hurts. Anyway, let's get this show started, shall we?
And it's all just a little bit of history repeating.
It is repeating and repeating ad nauseum. And we will continue on that. But today, let's get back to it. Two brokerage firms, Lombard Wall, a government bond dealer, and Colin Hoshness, a market maker in small stocks, go bankrupt at the same day. The Wall Street Journal quotes Gary Fragan, head of stock trading at Oppenheimer, saying that it appears that the market will have to go much lower before we see a sustained rally, because each time it has tried to rally recently, there hasn't been any follow-through. The very next day, one of the greatest bull markets of all time begins. And this is the problem that was in 1982 and in 2015 too, and that is speak too loudly and the trading gods will make an example out of you. And I have been wrong many times, but I want to be right when it really counts, and don't care that I'm wrong when it's just a little bit. And I suspect that if I sit on my hands for a while, that there are going to be some fairly large returns in this market for me. I don't know how they can get around the movement they have. They're going to continue to push it, and maybe they can get this thing sideways into the end of the month. But it just doesn't look to me like that there is a lot of upside in this market. You're going to have a lot of sellers every time we come back up. And again, volume pretty much dies off as soon as you go across one of these lines. First it was 2108, then it was 2100. My guess is that 2080 is going to be the line where all volume stops again. And they'll continue to buy every dip. But they did that in 2002. So I've been to this rodeo before, and I don't think it's going to be any different than the times before. I'm looking for some big gap downs in this market, kind of like the gap down we had today. A lot of people are probably, if they didn't sell already, probably thanking their lucky stars and thinking about selling now, maybe before the end of the day. But anyway, we really need to be watching that dollar index. And guess what? It's almost back to 96.30. We'll see how this thing operates during my show. And at the same time, you can always give me a call, 877-927-6648. That's 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den. What else to say? Okay. Oh, we got other stuff to talk about. We took some gains this morning, and I think that at least for commodities, we've seen a short respite. I guess it's the fourth or fifth time that we've got EDZ, which is a highly leveraged short position in the third world markets. We got in at 38 and change, got out at better than 30, got out better than 43.50 today, and banked some nice coin. This thing is, I'm getting ready to call it ATM instead of EDZ because we've hit it almost perfectly so many times in a row. But it could be just the beginning of a beautiful relationship with me and EDZ. But I'm gonna rename it ATM because it's been pumping out the cash regularly and operating almost perfectly. And we took some cash on it once again today. Again, watch this market. Any close back below 2070 is strychnine, death, Armageddon, dogs and cats living together, real wrath of God stuff. So you've got to watch out for that. And again, watch out for that dollar index above 96.30. That would be a second or third or fourth. How many false breakdowns have we had of that dollar? I think it's going to even higher now. I think that the Fed monkeying with this has done one thing, and that is build steam to the opposite side of this market for the dollar. And I was kind of sanguine thinking it was just going to go to $100 and maybe fail there. I think it's going to blow through $100 in the near future. May take till September, but I think in the near future, and then headed to 125, 130. It really looks to me as the world markets continue to buy dollars, to buy U.S. stocks. It makes things even tougher. And again, like I said, out of the frying pan, everybody was so sure that they wanted to be in China. So when China blew up, they all were so sure they wanted to be in the euro and the euro markets and in the DAX and France and the UK. Now today, everybody's sure they want to be in the United States. And guess what? In a week, 2 weeks, they'll all be crying once again because, of course, when a tide goes down, all boats go lower. And we've got at least a little bit of pullback to get handled in these markets. But we'll see how the end of the day closes out. And if this dollar dramatically moves below that 96.30 level, then I am wrong. And I'm constantly wrong. But normally when I'm wrong, I'm only wrong a little bit. And when I'm right very much. So that is it. Okay, what else do we have going on? Well, we took some gains. I got a little clip. We talked about this. I think I played it, but I can't remember if I did. And I want to get his name straight. John from Philly keeps on telling me I get it wrong. And the reason I get it wrong, we'll talk about this a little bit when we come back. The reason I get it wrong is for 4 straight months, all I had to do was read about Ellen Powell. P-A-O. And it's stuck in my mind. But, we'll get over that and move on to Powell, P-A-L, when we get back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we have a question in the den. It says, Dave, please, exactly who is trying to get delta neutral? Option market makers. They sell both sides of the market, and that's it. Who is trying to do it, and for what reason? The reason why that they go delta neutral is eventually most of the premium is gone, and therefore most of their profit is there. Why take the risk? What happens if there is another major event like China in the next few days? The premiums are very small. So what they will do is go delta neutral. That is by locking in most of the profits. It doesn't mean actually buying back the options that are there, although they do try to do that. But they will actually take the other side of the trade. So if they have a put, then maybe they'll go long the stock. If they have a call, maybe they'll short the stock. All they want to do is make sure that all the money that they have for the last 7 days of these monthly options that maybe, those monthly options were sold maybe 60, 90 days ago. And all they want to do is make sure, even 180 days ago, depends on what the options are. All they want to do is make sure in the last 7 trading days or 8 trading days before the market, depending on how high the volatility is, they just want to make sure that they're not going to lose a great deal between now and expiration. And the volatility is so high going into expiration week that it makes a great deal of sense just for them to do that. And it's the equivalent of somebody that sells arms to sell arms to both sides when it looks like maybe one's losing. and the losing side needs more arms, sell to them too. Keep that war going on just a little bit longer, and we'll sell to both sides. But the real reason is that that statistically it becomes too expensive for them just to have a laissez-faire view of the market. They need to get on both sides of it and lock in any profits. Most likely, what will happen is the premium will go down to zero, and the option will go unexercised, as 85% of them do, and they get to keep all the money. The worst case is that they've locked in those profits for putting money to work for the next 7 days. Hopefully that makes sense to everybody. If you have any more questions, post them in the den or give me a call at 877-927-6648 or email me at path@tfnn.com. Hopefully that does solve all your questions. And I've received a new fax. How exciting. Anyway, I got almost everything worked out for Windows 10. There was the major update package that we were waiting for. I installed it this morning, and it took care of a few nagging issues with the interface. So I'm extremely happy with it. And probably by about a week from now, my guess is that Windows 7 will be retired around here unless I need to go back and do something that I haven't done in a great deal of time. I need to get a few more email addresses off of my old system. But other than that, I think I'm doing pretty good. Anyway, we were talking about Raoul Pal before. I wanted to play this little segment for you, and then we'll talk more about it after the break.
Yes, I do. I just look at what's happening to global export growth because of the global economic slowdown that's going on everywhere. And Germany is the big exporting nation of Europe, and I see that it's slowing down. You look at its PMI, I think Germany is at risk of leading Europe into a recession, which is very much against everybody else's opinion.
And specifically, you see the German economy basically being 1 or 2 cycles behind the U.S., so that Germany will feel weakness because of what's going on here.
Absolutely right, because the U.S. is weak. The GDP numbers came out. The first half of this year is the weakest first half since the recession. I think that feeds into Europe. It takes time. Europe lags the U.S., so I think that won't help Germany at all because obviously U.S. is buying less goods from Germany. So that doesn't help right now.
Anyway, pretty good call since it was last week. Or was it even longer ago? I thought it was last week. Maybe Wednesday, Tuesday last week. I can't remember this stuff. You guys got to help me out sometimes. I remember I sent it to a few people just to see what they thought. But his calls have been dead on for the last 2 years. I don't know what he did before. He's kind of a rock star. He's not right in the next 5 minutes, and he's not right in the next week mostly, and he's not even right in the next month. But over the long term, he's got a very good track record. And if you know at least where you're going in the long term, maybe that can help you at least in the medium or short term. One day rolls into another. It's just one giant fog. Yes, I know. Anyway, you still got plenty of time to give me a call, email me, and appear on the show. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's 0 risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we got this currency battle going on, and basically it's turned into a food fight. Yes, a food fight. And what are we going to do about that? It's going to be tough. It's going to be a headline-driven market, and that is going to continue to make it look very tough for us and what we do. We're going to go to some charts here and see how things are working out for some of these Chinese stocks, or those stocks that are most susceptible to China's influence. And Alibaba was out with earnings this morning. Not a good day to do it. It blew away its previous lows, got down to $71.03. You got some decent volume back out here. But again, doesn't matter. This thing, its IPO price is long overdue in the rearview mirror. Another mixed metaphor there. I'm starting to ring them up. I'm going to win the award for mixed metaphors once again this year at TFNN. But keep an eye on it. I'm still watching the dollar here with one eye. So if I act distracted, that's all about it. That 9630 area is extremely important. And we're pulling back a little bit in the S&P cash. 20 is 73.65. A close under that 2070 area would be extremely bearish. So watch it closely. We already got 3 billion shares on the New York Consolidated Tape. So we have monster volume, 80% chance of testing 2052 probably before we go much higher. I don't know if it's going to take the next couple of days. And again, of course, we're always going to be having to watch around the corner for Janet Yellen and Mr. Liu and anybody else that can come out and manipulate the dollar. But they threw everything they had at the wall against it, and it looks like that 96.30 area is holding on the continuous contract. So we'll continue to keep an eye on that throughout the end of the day and on most of TFNN. I think we've got 2 hours of Tom O'Brien to talk about it. I know he's rather bearish on the dollar. I think this is yet another false breakout to the downside. Anyway, that's a one stock that I'm taking a look at here. Let's see some others that look very interesting. To the upside is FIS. And this one is breaking above previous highs with volume. Fidelity National Information Services. What do they have to say? Announced it would acquire software maker SunGard for $9 billion, and apparently everybody loves that. But it is breaking above, so one of these stocks that is bucking a lower trend. Other stocks of interest moving here in the market today is CF. It's up 7%, but that's not much. This thing came off of a reverse split or something, or split. Nice move out here. Volume has picked up. This thing's been kind of in a downtrend, really hasn't bucked it that much. Formed a strategic venture with CHS, and we'll buy a minority position in it. Of course, other stocks, EOG, a lot of people out on CNBC the last couple of days pumping the stock very hard, and it has come off of the bottom fairly strongly. Volume okay out here today. It has gotten past the level of congestion that it had from the 29th of July to about the 5th. And not a bad looking chart out here. I would really like this thing to test 72.87 before I would buy it, but it doesn't have to, but it would be nice. On the downside, we've got JD. Again, more problems with Chinese stocks. A little hammer out here today. Does that mean that's the bottom? Well, certainly means that you still need to test 25.64 before this thing gets off the bottom. And certainly the volume of the last 2 days broke the previous low of July 7th with a volume. JD.com, let's get the profile out here on it so we can bring it up. As an online direct sales company in the People's Republic of China, known for the transparency in accounting. Yahoo, of course, in the league with Alibaba. Let's see how that has affected this stock. Well, it's blown through all support levels. Didn't have the volume of October 15th, 2014, where this stock had 41 million shares. It's down on 20. It also with a little hammer candle. We'll see what we've got a little bit more out here. Looks like it is headed for this $32, $33 area that was a congestion zone going back to July 18th of 2014 and May 16th of 2014 and April 11th of 2014. Looks like you're close enough to that right now that you got to get at least into those areas and find some support before this does any better. But I think this is going to be roadkill on the internet, and we'll see. Cree had some good earnings out here. Let's see what they have to say. Missed its estimates, reported revenues in line, June warning, but guided up. And I guess that's all that matters. Very interesting pattern out here where it opened much lower and went much higher. But my guess is this has a lot to do with short covering. And somebody got a lot of people in here short this morning, probably some day traders, and ran them like and beat them like a rented mule by the time it was over out here today. Much higher. This thing looks like maybe an ABC. Give it about 3 days and see if this thing isn't headed back down. It certainly has a high volume low at 23.36 today. So look for that to get retested before you see any meaningful move higher. GIII. The apparel group, GIII, it got back about half of what it was looking for. Did pop on very nice volume back on June 3rd, 2.2 million shares. When it did that, it kind of touched it just today, just briefly out here with about 1 million shares. So keep an eye on this one. G3 Apparel Group. And what else do we have out here? On the downside, ACM. And that's ACOM Technologies. It could have been worse out here. A lot of volume, but this is pretty much in keeping with what the market was doing already. Oh, we've already popped back up. 2078, 2079. So some people didn't like my comments about this thing closing below 2070 and decided to get all over it. Well, maybe I'm wrong on this thing. We'll have to take a look. We'll take a look and see if there was anything else out here. Wanted to look at a few of these other stocks that did have some issues with China. Let me go look at those real quick and see how they're doing today. Okay, China exposure. What do we have? Apple, of course, up $1.50 out here. Broadcom up 28 cents. We've got Micron up 26 cents. Win still off. Let's take a look at that. The other one's not much. Win Resorts. And I wonder if it's just not going to be any better anytime soon out here. Well, you're going up against the 3 million share low of June 29th. $93.59, 3 million shares, 2.1 million shares so far today. So you could get 3 million shares by the end of the day. We'll have to see how this comes out. But it doesn't look to me like there was no volume down here. It just went down and touched it briefly and popped back into the trading range of this, what is that? The June 29th low at 93.59. So that's about it from China. Let's see what else we have in other sectors. Let's take a quick look at the Apple suppliers and see what's moving in that realm. QRVO, which is the old RFMD. QRVO. Looks like it's off the bottom. But boy, this thing probably not going to go that far before it runs into a lot of resistance. And that is this huge gap down that happened on the 30th of July that happened with, 10 million shares. We're up about 2 million shares here today. So probably not going to be a lot of juice in that one. Other stocks of interest off here. NXPI still off 2%. And XPI, the makers of the near field communications chip in the iPhone, still down. This thing gapped up on fairly decent volume on the 30th of July of 6.5 million shares. Today, closing in on 6 million shares. So it's not going to be on lighter volume. It filled a lot of this gap. My guess is that you're really looking, if you want to buy this thing, at the $85.72 low, $8.2 million shares that day. And what do you have today? 6. So you're close enough into that candle. It's probably going to get sucked back down there and get at least one more retest. Qualcomm, pretty much flat. Broadcom, it's up 33 cents. Let's take a look at Broadcom. BRCM. And what do we have here? Okay. What do we got? Well, I don't know. You got this huge day that it had. It's come back and trying to fill it. You know, $48 may not be bad out here. I know that they're making a deal. I don't know if that deal's falling apart or what. I'm going to need to spend some more time on it. Let's look and see if there's anything else out here that I missed that's in play, as they say on the street. Yahoo. W. Oh, boy. We haven't talked about this one yet today. Wayfair reported Q2 earnings, a loss of 15%, or 15 cents a share, 14 cents better than the Capital IQ estimate of losing 29 cents. Revenues rose 66%, and it's one of these high flyers with a lot of short interest in it. Let's go back and look a little bit further. Yeah, it's an IPO, recent IPO, and they got a bunch of people sleeping on this one with a giant short interest up to $50. But all you can say is it did gap up. It did gap up and away, and it did with a sign of strength. If this thing could come back down to $40 on light volume, you'd probably want to be taking a look at it. See if there's anything else. Tahoe, another one up today, fairly strong. TAHO. We got a couple of minutes left out here. Tahoe Resources, like a lot of these companies, bouncing off the lows out here today. And what do you got? You got okay. Well, you got probably an ABC setting up or a retest of this low, it looks like. Energy on the way up is not a whole lot. This thing kind of gapped down, had a lot of energy off that gap down a couple of days after it came off that high at 15.14, July 15th. So we can look at that. Just see how far this one would have to retrace to keep a good eye on it. Okay. Got about $11.23 for a 50% retrace and $12.15 in a normal retrace. So yeah, you got a pretty good congestion zone starting at $10.60. So maybe another 50 cents in this one. If you did pick it up at the lows, you'd probably want to be out there because it's going to have a tough road at about 1060 and above. And that comes to all the stocks making news out here today. Take a look at LVS. LVS from the den. And I don't know what the question about LVS is. XLE dropped today. Yeah, crude's up. Yeah, Las Vegas Sands doesn't look any better out here, except the volume. But looks to me like you still need to test $49.57. And I don't think that makes anything any better out here other than that. What are we at a dollar? Okay, we're back up above 96.30 on the dollar. So we got to keep an eye out on the strong dollar out here. It is not weakened. It had a false breakout today. As long as it continues to hold that 96.30, may just be a giant head fake. Anyway, LVS out here looks like it's back into that range. Let's take a look at TrueCar when we come back. Got a few other ones. It's not doing anything. We've got a few more stocks to look at when we come back. Give me a call, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we're watching a market out here trying to push higher. Got 3 billion shares already today at the close of the show, and that is a huge day. That does set up a retest of the 2052 low. And, well, I don't think there's much upside to this market. All we really need to do in the next week is tread water down to 2052 to keep at least the options pattern alive. And it's not any different. We'll see how the options come in tonight. And I'll sit on my hands for a little while longer. Still making good money on many of these shorts we have in the newsletters. So I'm not going to panic here today. But still look at that dollar index. It's 96.32 on the continuous. Keeps hope alive for the bears. And to me, it still is manipulation by the Fed. And eventually that will go away or be absorbed into the market, and it will go back to doing what it was going to do already, just a bit later. But we'll take a look at that. Let's take a quick look at Apple before we go out here, and a few other stocks of the big variety out here. This went into the gap we were talking about, got to 109.63. My guess is that this is just probably going to hang out here around 115 through expiration next week and slowly continue to move down to 105. I have to do a I told you thusly.
I informed you thusly.
I informed you thusly. The reason why is I finally saw the first person on CNBC actually bring up the fact that people are going to have to start paying a lot of money for cameras from Verizon. Would they go a whole week without bringing that up after the news broke? At least this is the first guy I saw it, and they hustled him off the show as quickly as they could today. I think it was around noon. I don't know who it was, but at least there's somebody out there with my view, which is that sales and or margins are probably going to be under pressure for years to come now, with Verizon breaking with the rest of these folks. And of course, you saw that triple, quadruple top up at the highs in Apple. And of course, when it broke, that's pretty much destroyed a long-term version of it. I don't think the stock is going to zero or anything else. I just suspect that we're probably headed back down to 105 and 103 over time. And it may take till September. So we may have the majority of the energy coming out of the stock right now. But more important to me is going to be how this probably becomes a non-player and becomes very non-volatile as they continue to distribute the stock, which I suspect they will for years to come. It just doesn't look like they've got anything else. Of course, the PR machine will be back, September 7th, September 9th, something like that, and they will be pushing the next version of the iPhone 6S. And the question is if there's going to be any new features in that really has people stampeding to go in. At Verizon, if you just bought your phone on contract and it's still on the 2-year contract, you want to upgrade, you're going to be paying somewhere between $700 and $800. That may put a little hitch in their get along, as they used to say in the countryside. My grandmother put a hitch in your get along, whatever that meant. I think that's what we're talking about here. Anyway, you got that nice gap. We went into it today. We're going to need to get this thing probably retested. That's 109.63. My guess is we're still headed back down to that other gap that's 105 to 107. And then we've got the low at 103. So we're going to take a little time now that we've come off with energy, but I think we're going to get down to that 103. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.